This is your market recap for May 27th, 2025. Today, we played 100% bullish. I mean, there was maybe one or two instances where we took out another low, but other than that, like there was no bearish intent ever, which I don't really understand. So go to the 1 hour. We see this week right here, right? So we see Friday at 4 p.m. and then this is Sunday. So this is when the week opens right here. We have 25 handles worth of sell side. And then we play bullish, right? We take out these highs, retrace, respectable. I mean, is it equilibrium? No, but it's not even equilibrium of this week's move. So kind of understandable. And then we play bullish again, taking out these highs. Look at how shallow we sweep, right? We don't have any closures above it. We don't have anything like that. And then we come down, we retrace. This bearish fair value gap right here, validated right here, right? Extend that. Boom. 9:30 price comes down, taps constant encroachment, and then rallies the whole day. Now, I was bearish today. I was. A couple of reasons. One, I don't believe that 25 handles worth of sell side is enough. I just don't. I find it very hard to believe that we're not going to make another low. And I thought we'd start early, right? I thought we'd reach down to this early in the week and then continue up higher. Maybe not. So that's one. Two, these sweeps right here, this is an SMT because ES swept it more convincingly, like it had closures above and everything, and ES didn't. So, sorry, and Q didn't do that. As you can see, it didn't close above this high. So that would be number two, why I think it would play bearish today. Now, we did play bearish, right? 7 o'clock pre-market took us down, hit the constant encroachment of this 1 hour, and then proceeded to rally like never before. And this is one of those things where even if I was bullish, I really don't think that I would have been comfortable playing bullish after having such a rally and then such a big another rally without a proper retrace. So this is one of those days, and as we can go down to the 15-minute, there really wasn't much in terms of what price was doing. It was really just climbing higher and higher and higher and higher and higher. There was limited retraces, and there was very, very limited lows taken, which is atypical of a normal day. So market opens, rally down, right down here. This is equilibrium of this move. I was trying to see if it wanted to play bullish, maybe take out these highs, which it does, right? But it continues way higher. So come down again, this 1 hour inverse fair value gap gives us nice reaction, constant encroachment, and we just rally. I mean, we rally the first 30 minutes after that, from 45 to 10 o'clock, and then we sweep it, and you can see the wicks start to come in, and we just march higher and higher and higher and higher and higher. We end up hitting this 15-minute inverse, right? 15-minute bullish fair value gap validated right there. Extend it through, bang, reaction, constant encroachment. This was the move that I was looking for today, but then I just saw how the market was acting. I didn't want to be in that. So if you were bullish, a great day, right? A great day. But there's no reason to be bear or bullish because we've already played bullish with no retraces since we opened on Sunday. So, constant encroachment of this hourly. Well, let's start up here. Barely swept us high. Retracing, right? Retracing. 9 o'clock macro takes us up, sweeps this high. We do the same thing. I mean, look at these closures, right? There's no closure above this wick or above this high right there, right? So if it's like this on a higher time frame, we come down, take out this low, sweep it, and whatnot, right? So that's what we should do on the higher time frame. But no, what we end up doing, barely sweeping this, coming all the way down here, constant encroachment, and then rally. Once we break this high, we should retrace, right? The move starts at 9:30. So we should retrace around 10:30, maybe push it back a little bit from the usual 10-10 macro. We should have retraced to equilibrium. We don't. We barely even retrace. And then from there, we just march up. Look at all these wicks. No lows taken, no lows taken, nothing. Nice expansion here. 5-minute reactions with this, the closures. Boom, constant encroachment here, a little bit up here, macro. Sent us bearish, but barely. So then we'll go to the 1 minute. Bang. Sweep of this high. Barely sweeps it. SMT of highs, right? Now, we also have an SMT of these highs. So if you're thinking, well, maybe that's the difference between this reaction here and the higher time frame one. And I say, no, because we also have an SMT on the higher time frame, but it's an SMT of closures, which is the same but different. So get this SMT, rally down. At this point, market opens, we take out this low, right? We then retrace from this low up to constant encroachment, right here, right? Perfect closures here within this 1 minute. That takes us all the way down to this constant encroachment of this inverse fair value gap on the hourly time frame. We then rally, react off this 1 minute fair value gap, bang, right there. We then close above it, 1 inverse fair value gap touch, 2 inverse fair value gap touch, boom, expand upwards. All right, and you would have been riding this the whole day. Takes out this high up here, and then here come the wicks, right? We have no goal once we reach this. By the looks of it, we're just going higher and higher and higher. So sweep it, consolidate, SMT of these lows. This isn't something that I'd want to get in, even though on the 15-second there's 100% a change in the state of delivery and a 15-second fair value gap. The reason I don't want to be in this is because we had this huge expansion. And if we look, 200 handles, and you're telling me we're going to retrace 40? That's crazy. So I wouldn't feel comfortable getting in this, even though there's an SMT here. But during the macro, with this SMT, we rally higher, reach this bottom of it, react down to the 5 minutes, constant encroachment, play higher again, 15-minute inverses, constant encroachment. This is the trade of the day, but I didn't take this because I just did not want to go through the agony of holding it. We see a nice, so first it's in the macro, right? The macro is the start of the move. We then see a 1 minute fair value gap, reacted here on the 1 minute, nice closures, down this fair value gap right here, validated with this reaction here. So we extend it, nice reaction here once again, takes us up to the constant encroachment, down this here, in a perfect world, in a clean market, this right here, boom, taps this and then expands lower. But as we can see, we're clearly not in a clean market today. Then expand, another SMT of closures, expand lower, closing below this low, retracing up, 1 minute fair value gap here, getting filled. That's your entry. Stop goes above constant encroachment of this wick here. Bang. Then we target liquidity. Simple as that. So here is a 1 to 8, not enough for me. So this would have been profit 1 at a 1 to 3, and this would have been finals here. Given how big of an expansion we had, right? I doubt that in PM session we're going to have an equal expansion below this low. I just don't think it's going to happen. So yeah, I would have wanted to have this as finals, but I did not take this trade. I saw it, I marked all this out, but I simply saw this price action. I mean, look at all these wicks. Look at all these wicks. The 15-second is an absolute mess. And you're telling me a 1 to 4, 1 to 4.5 within an hour? I don't want it. I simply don't want it. Because the amount of times that I've been in this and I just consolidate to the end of the day. Not something I wanted to do. So I saw it. It was a nice exercise for learning PM session, right? But I just didn't want to be in it. Simple as that. But it is trade of the day. It would have worked if you wanted to sit through it. But this would have netted me, 1 to 3 would have netted me, so 15, like $2,500 from this move. And just not worth it, in my opinion. Simply not worth my effort. Mental effort, and just it's going to take up so much of my mental capital. Seeing these deep retraces, these candles here, I'm just going to be sitting through this, regretting entering it. So I just didn't take it. But future, going into the future. Sorry, my mic cut out a little bit. I would like to play bears from here. Would I like this high to hold? Ideally, yes. Ideally, yes. I think if this holds and we come rally down and take out this low, we have 100% satisfied our buy side requirement for the week. Now we just need to work sell side. If we look on the weekly time frame, when's the last time you've seen this small of a wick? Right? You don't. Here, yes. But I looked at this one, and price tried. It tried to make a new high, and it failed. That's understandable. Here, didn't even try. Opened, 20 handles of downside, and then boom, straight upside. So I think, right, we're playing within this wick. We have this nice 15-minute inverse fair value gap. Ideally, an SMT of these highs would be great, but I do think this week, targeting this low, this low, this low, and then obviously this weekly inverse fair value gap. Whether we turn around in London session, no clue. But I can tell you this for sure. I am 90% sure that if I'm given the opportunity to play bullish tomorrow, if it's like this, I'm not taking that trade. 90% sure I will not be taking that trade. Of course, it can't be 100% because there's some stuff that market could do in the meantime to convince me otherwise. But as of now, I really think we need sell side. And there's a reason. I mean, me personally, I follow multiple people with regards to trading. None of them were playing bullish today. I saw none of them post about having wins playing bullish. It just is how it is. I mean, it's a 4-day week, right? We have Memorial Day on Monday. It kind of throws everything into a mess. So definitely playing the back foot. Play it safe, right? Trading is more about conserving your capital than it is making it. So, yeah, that's been your market recap for May 27th, 2025.